Okay. Good evening, everyone, and we are back with our first session of the FR blended batch, where we'll be going through something which is fundamental for all students who are preparing for the financial reporting paper or any exam basically in the world of accounting. And guys, if you are not talking to me, please remain on mute. It is kind of disturbing. Okay. Thank you. So let's focus on, getting the feel of accounting entries right, because a lot of what we are going to do will primarily require us to know the basic accounting entries. Okay, so let's quickly revise the golden rules of accounting and then we'll follow this up with a couple of questions. Okay, let's talk about personal account. Okay, now can you tell me what exactly is a personal account? Mansi, what is a personal account? Manas, personal accounts are those accounts which basically represent persons. Okay, so all real persons like you and me will be included. All artificial persons like government, company will be included. And this account is also used in those places, where you are representing a person. For example, if salary is payable to Mansi, we will be using salary payable account. Now, this salary payable basically stands in place of Mansi. Okay. Salary payable stands in place of Mansi slash it represents Mansi. So, salary payable is also a personal account. Okay. So personal accounts basically stand for real persons and artificial persons, and personal account also stands in place of individuals. Uh, like it represents these individuals. Okay, which is, say for example, rent is payable to Mehak, so I record an entry. I basically use the rent payable account. Now this rent is payable to whom? It is payable to a person called Mehak. Hence, rent payable is also a personal account. It stands in place of a person or it represents a person. Then we have, acha, personal accounts include both assets and liabilities. Okay. Assets are, uh, assets in this case represent money receivable from someone. Okay. And liabilities in this case represent money payable to someone. So personal accounts include both assets and liabilities. Personal accounts are for persons like you and me. Personal accounts are for people like you and me, and it also includes the artificial persons. Okay. Personal account के बाद second type of account क्या है? The second type of account is real account. Real account, as the name suggests, is for all things real. Okay. So what is real account? So for all things real. Basically, items which can be seen or touched, and also includes some intangible items as well. Okay. Uh, so basically, these are all asset accounts. Okay. So when I say table, building, furniture, plant and machinery, cash account, all of these are real accounts. Real accounts are all asset accounts. And what are some examples of these? Building, plant and machinery, cash, furniture, etc. Okay. After real accounts, we have nominal accounts. And what are nominal accounts?
P&L accounts.
No. Nominal accounts are all income or expense accounts.
So can we not say it pertains to profit and loss account? I mean, like profit and loss for the year?
Not at this stage. Not at this stage. No. Nominal accounts are income and expense accounts. That income and expense figures go to profit and loss account is a separate discussion altogether. But what are nominal accounts? These are income or expense accounts, basically.
Okay.
Examples would include expense heads like salary, rent, stationery expense, uh, repairs, etc. Okay. It also includes income heads like uh, interest received on fixed deposit, sales, discount received, etc. Okay. So incomes include gains also, and expense include losses also. So that is basically our category of nominal accounts. Every account that you can possibly think of falls into one of these three categories. And with that in mind, we should go back to the golden rules of accounting. What are the golden rules of accounting? For personal accounts, the rule is debit the receiver,
Okay.
credit the giver. But this line is only half baked. Okay. Debit the receiver of benefit. And the second rule is credit the giver. But giver of what? Credit the giver of benefit. Debit the receiver and credit the giver. Then you have real accounts ka rule, which is
Debit what comes in, credit what goes out.
very good. Debit what comes in and
Credit what goes out.
credit what goes out. The last rule is for nominal accounts. Okay. What does this rule say?
Debit all
Debit all.
expenses and losses, credit all income and gain.
Very good. Debit all expenses and losses, credit all incomes and gains. So, whenever we are performing the activity of accounting, we should basically, first of all, identify what is the account type. Then we should apply the rules, and then, we should move to framing the accounting entry. So, what are the steps in framing accounting entries? So, your step one is identify the accounts involved. I'll show you how to apply. Step two is classify the accounts involved into real, personal, and nominal. Okay. Step three is write down the applicable rule. Step 1, identify the accounts involved. Step 2, classify the accounts into real, personal, nominal. Step 3, write down the applicable rule. And step 4. What is step 4? Step 4 is apply the rule and frame the entry. I am sure you have watched this in the recordings that you have gone through. Now, after understanding what are the 4 steps in the act of accounting, let's see if we can replicate that and if we can actually apply these rules to accounting scenario. Okay. We look at around 8 to 10 different questions which will help us to master the basic act of accounting. Okay. So, question 1. Mehak purchased a car, or Mehak purchased a computer and paid 50,000 immediately. Now, I don't want you to straight away tell me the answer. I want you to follow these steps. Okay. What are these steps? Step 1, identify the accounts involved. Hema, can you tell me which are the 2 accounts involved here?
One is computers, which is a fixed asset.
No, don't say all of that. Just tell me the accounts involved.
Computers.
And what is the second one?
This will be bank or cash.
Let's
Paid.
take cash. Okay. Now, Manas, classify these accounts into real, personal, nominal. What kind of an account is computer account, real, personal, or nominal? If your mic is not working, please type it out in the chat box. Okay. Computer is real. Mansi, what kind of an account is cash account, real, personal, or nominal? Mansi,
Real.
real. We know the rule, right? What is the rule? Debit what comes in, credit what goes out.
Credit.
So this is the rule. Debit what comes in, credit what goes out. Mehak, tell me, is computer coming in or is it going out?
It's coming in.
Coming in. So computer account will be debited by
Yes.
computer account debit. 2, cash is coming in or going out?
Going out.
Going out. So computer account debit to cash account. How much? 50,000. Now, question 2. Mehak incurred, or I would say Mehak purchased printing paper for her business use. The cost was 1,000. She purchased it from Manas. The amount is still not paid. Okay. Again, let's go in a stepwise manner. Step 1, identify the accounts involved. Mehak, tell me which are the 2 accounts involved here?
Sir, printing paper and cash.
Can we have a better name for printing paper?
Stationery.
Stationery. So stationery. Should I call it an expense or what should I call it?
It's an expense for me.
So can I say stationery expense?
Yes.
And what is the other account? Mansi, tell me the other account involved here.
Payable.
Payable. But is there like a person to whom it is payable? Is the name available?
Yes, Manas.
Yes. So stationery expense, and Manas. Okay, now let's look at step 2. Classify the accounts into real, personal and nominal. Okay, so Manas, मुझे बताओ stationery expense का category and Manas account का category, both. बताइए nominal and which is nominal? Stationery expenses nominal. Manas is personal. Okay. Step 3, write down the applicable rule. Hema, can you tell me the applicable rule?
Yeah. Normal debit all expenses and losses, that is stationery will be a debit.
Okay. So the rule is debit
Debit all
all
expenses and losses.
and losses. And for personal account, debit what comes? Sorry, debit the receiver, credit the giver.
Credit the giver.
So is Manas is giving me stationery, right? So Manas is the giver of benefit. So debit the receiver of benefit and credit the giver of benefit. Debit the receiver of benefit and credit the giver of benefit. Manas is the giver of benefit. Stationery is an expense. Stationery
Yes.
is an expense. Hence, should be debited. And Manas is the giver
Should be
of
credited.
benefit. Hence, should be credited. So the accounting entry is by stationery expense account debit to
Manas.
Manas account. See, you might feel that, this exercise is a little, slow, but you
Thousand.
understand that when you are attempting other questions in FR, like when you move to other standards which are listed in the schedule, you will realize that this is a very important part of your FR journey. Mastering accounting entries is the first step. Everything else follows later. So please don't take it lightly and pay adequate attention to this. Okay. Now, there is something that we need to remember. Okay. What is that? Tip for using purchase and sale accounts. We can use purchase account only when we are purchasing the following: goods for the purpose of trading. Okay. Goods for the purpose of trading or raw material to be used in production process. Okay. We can use purchase accounts only when we are buying these two items. So if a business is purchasing a car and my business is coaching and I'm purchasing a car, it is an asset for me. That is never covered under purchase. What is covered under purchase is when I'm purchasing an item for the purpose of trading. For the purpose of trading means I have a, say for example, I own DMart, and in that DMart store, I buy chocolates, I buy food grains, I buy other items for the purpose of resale. है ना? For the purpose of trading and resale. We can use sales account only when we are selling the main goods slash service of the business. So if you sell something for scrap, or if you sell an asset, then sale account is not involved. So in on a lot of occasions, people are tempted to use the wrong account. I I feel it is important to know when exactly should you use purchase account and when exactly should you use sales account. It's critical so that when a question comes that a car is purchased, you don't end up debiting purchase account. You know that car has to be debited. But if I give you a question something like this, that Hema is a dealer in second-hand cars. Okay, Hema is a dealer in second-hand cars and she purchased 20 cars for a total of 30 lakhs from a supplier named Mansi. She paid 15 lakhs immediately and the remaining 15 lakhs is still payable. Now, let's go step by step. Step one, you should identify the accounts involved. Hema, can you tell me which are the accounts involved in this case?
Oh, cars will be under purchase only. So purchase, debit purchase, credit Mansi for 15 lakhs, credit 15 lakhs for cash or bank.
So let's answer questions one by one. If the question is what are the accounts involved, you should only answer that. The reason I'm stressing on this is when we start attempting, actual exam kit questions, what happens is we often get ahead of ourselves and we assume that the question has asked us this and we end up calculating that. So it's necessary to pay attention to the choice of words also in the question. Which are the accounts
Okay.
involved? Okay. So which are the accounts involved?
It is purchase, Mansi, and cash or bank.
Cash. Let's use bank here. Okay. Now, see, there are three accounts involved. And why did we use purchase account? Because Hema is a dealer in second-hand cars. Okay. Hema is not purchasing car for her use in the business, as in she's not going to take it around to drive. She is buying cars and selling cars. She is a dealer in second-hand cars. Okay. After that, you should classify the accounts into real, personal, and nominal. Purchase, Mansi, and bank. Mansi, tell me, purchase account is what type of account?
Nominal.
Nominal account. Mansi account is what type of account?
Personal.
Personal account. And bank account?
Personal.
Very good. That means I can see you have watched the lecture. Good. This is
Thank you.
nominal. This is personal. And this is also personal. See, understand one thing. Why is bank account personal account? Because bank is an artificial person with whom you have deposited the money. Okay. Who is bank? Bank is an artificial person with whom you have deposited money. Say, for example, I have to pay 5,000 to Mansi and I have to pay her by check. I sign the check and I give it to her. Basically, I'm instructing a person called bank. Ki there is another person called Mansi, usko paise de do. Right? That is the idea here. Bank is not a real account. Bank account is a personal account. Now we'll write down the applicable rule for debit all expenses and losses, debit the receiver, credit the giver, and last one, debit what comes in, credit what goes out. ठीक है. उसके बाद we'll have step 4. Step 4 is now apply the rule and frame the entry. So Hema is a dealer in cars. She is purchasing cars for trading. ठीक है. So purchase is an expense, nominal account, so debit. Then Mansi is a person or Mansi personal account hai, and I would say Mansi is the one giving cars to Hema, right? So Mansi is the giver of benefit. Credit the giver, and amount is paid from the bank, right? So bank is the giver of benefit. We should credit the giver. What will be the accounting entry? The accounting entry will be by purchase account debit to Mansi account. Bracket में I can write the word creditor to bank account credit. See, writing that to and by is, for you to know ki when we prepare the ledger, where what item should go where. So this is how much? 30 lakhs. This is 15 lakhs. And this is another 15 lakhs. So this is your accounting entry for purchases. Now, if my question would have been something like Mehak is in the business of Mehak owns DMart and she purchased a car. In her case, the entry will be car account debit to bank account because for her, car is an asset. Okay. Now, having understood how exactly are, accounting entries framed, we should know what happens after this, right? This is the starting point. You identify the accounts involved, you classify them into real, personal, nominal. Then, you break it down, you apply the rule, and then you get your accounting entry. But is that the end of our discussion? No, it's not. Because after this basic accounting entry is done, okay? After, so what happens is all of these accounting entries are done in a place which is known as the journal, or you have other books of primary entry. Now, what are books of primary entry? Books of primary entry. Okay. These are those books in which we record the transactions for the very first time when they take place. Okay. These are those books where we record the transactions for the very first time they take place. This is the first place of, look at the word, huh? You are recording a transaction. So and this is recording of transactions, not summary of transactions. You are recording every single transaction. So you have the sales book, which records all credit sales. You have the sales return book. It records all sales returns against original credit sales. Then you have purchase book where you record all credit purchases. Then again you have something called as the purchase return book where you record all purchase returns against original credit purchases. Then you have the cash book where all receipts and payments in cash or via bank are recorded. ठीक है. इसके बाद what do you have? Sales book, sales return book, purchase return book. You also have anything which doesn't go here goes to a place called as the journal. ठीक है. So anything that is not recorded above goes here. These are your 6 books of primary entry. You could also consider the petty cash book as one of, the other books of primary entry. Now, having understood what are books of primary entry, this after entries are recorded, okay. After entries are recorded above, they need to be summarized. Now, if I ask you, see, Manasi is my regular customer. So I am selling goods to her. I'm recording the cash collection entry. Then she's returning some goods. I'm giving her a discount. Multiple transactions have happened with Mansi. So in any month, there are at least 50 entries with Mansi, which I keep on recording in different books. If a credit sale happens, it is recorded in sales book. If I collect cash, I record it in the cash book, and so on and so forth. At the end of the year or at the end of the month, my manager asks me, how much is the total? How much does Mansi owe us? Mansi से कितना collect करना है? Now, I will not know offhand na, how much do I need to collect from Mansi. So I will need to summarize all transactions with Mansi in a place that is basically known as the ledger. What does a ledger do? A ledger is a place where all entries, all transactions with a person are summarized in one place. Okay, so this is your ledger, which for example, I will call it Mansi account. Okay, so it has a debit side and it has a credit side. All transactions that take place with her are summarized here. For example, we sold goods worth 50,000 to Mansi on credit. Our entry will be Mansi account debit to sales. Mansi account ko debit kiya, write on the debit side and write down to Mansi account. How much? 50,000. Okay, then Mansi paid cash to us. How much did she pay? Mansi paid me 15,000. Accounting entry will be cash account debit to Mansi account. So here I will credit Mansi account with 15,000. And after this entry is recorded, she paid me some more cash. How much did she pay me now? She paid me 8,800. So cash account debit to Mansi account. Okay. Now somebody asks me, what is the balance at the end of the month? How much does Mansi owe me? What I will do is I will take the total of both sides. Pay attention. Okay. I will take the total of both sides. What is the total of debit side? Total of debit side is 50,000 and total of credit side is. Now I'm going to tell you how to balance a ledger and calculate the balance. How to balance a ledger. Step 1, take total of debit side and total of credit side. Then step 2, identify which side total is more. Okay. Now, if total of debit side is more, then it is a debit balance. And if total of credit side is more, it is a credit balance. Okay. If total of debit side is more, it is a debit balance. If total of credit side is more, it is a credit balance. अब यहाँ पे very clearly the total of debit side is more, which means it is going to be a debit balance. अब write the balancing figure on the side whose total is short. Okay. In the above case, it will be written on credit side. Okay. It will be written on the credit side. So I'll just remake the account here. Okay. Now tell me something. You cannot, there is 26,200. Okay. What is this 26,200? This is basically amount still recoverable from Mansi, right? This is amount still recoverable from Mansi. Now tell me something. The year has come to an end. I had sold goods to Mansi worth 50,000 and I collected some money. 26,200 is still recoverable from Mansi. What if I say this? कि यार year end, साल खत्म हो गया, so forget it. The year has come to an end. Mansi did not pay the money, maaf kar do. Don't collect the money. No, I cannot do that, right? I will go to, even when the financial year changes, I'm not going to allow Mansi to not pay me, right? Even if it is the next year, she still has to pay me. So there is a balance in this particular account, and I cannot forgive the balance. I will still end up recovering from her. So there is a balance at the end of the current year. I have not recovered that money. I am going to carry forward the balance to the next year and recover the money from her in the next year. So this is called by balance carried forward. Okay. I'm calling this my balancing figure. Okay. This is balance carried forward 26,200. Why is this so important? Because listen, I'm not going to forgive Mansi for the amount. ऐसा नहीं है she comes to me and she says अरे साल खत्म हो गया, रात गई बात गई, don't ask me for this money anymore. No, that is not the approach. She still has to pay me, right? This amount which was not recovered in current year will be taken forward slash carried forward to the next year and will be recovered in the next year. ठीक है? Hence, it is called balance carried forward. Okay? And understand that this is year one. Okay? This is year one. When we go to year two, we will still have the ledger called Mansi account. But what will it look like now? It will look like this. There was an amount from last year which was not recovered, and it was brought forward to the current year. We will call it balance brought forward. Okay, so here on the debit side, I'm going to write to balance brought forward. How much? 26,200. So these two amounts are closing balance of the first year becomes opening balance of the second year. Okay. It goes from here all the way up to here. Okay. It goes all the way up to here, and opening balance of year two is basically the closing balance of the last year. Okay. So this is how accounting is done. This is how ledgers are made and closed. Okay. And see, these are, understand one thing, that only real and personal accounts can be carried forward to the next year, right? It's like bad karma of one life is carried forward to the next life. But expense and incomes are basically items that you have incurred in this year. So expense and income balances are not carried forward to the next year. They are settled in the current year itself. So what we do is at the end of the year, all expense and income accounts are basically transferred to profit and loss account. And you can think of profit and loss account as a combined nominal account. Okay. You can think of profit and loss account as a combined nominal account. What it does is it brings together all the expenses and incomes in one place. Okay. So, uh, expenses and income balances are never carried forward to the next year. Real and personal accounts are, of course, carried forward to the next year. All the real and personal accounts at the end of the year will go to a place called as the balance sheet. A balance sheet is basically at the end of year, we will prepare a list of all account balances. Okay. A list of all account balances and write them in two separate columns next to each other. We will also write the balancing figures in all expense and income accounts. Okay. We'll write all the balancing figures in all the expense and income accounts. See, expense and income accounts cannot have a balance because it is going to be taken to the P&L account in this year only. But real accounts and personal accounts, the balance is going to get carried forward to the next year. So we prepare a list of all balances and we write them, debit balances in one column, credit balances in another column. This is done to check arithmetical accuracy of entries. What do we want to check? We want to verify whether for every debit there is an equal and corresponding credit. That is basically the job of a trial balance. It is a list of all the balances. It looks something like this. Trial balance as on some date. And why is it called trial balance? We call it trial balance because, see, we have not prepared the final set of accounts. Final set of accounts is your balance sheet, P&L, cash flow, and all of that. This is one step before that. See, we don't want to reach a position where we start preparing the balance sheet and the balance sheet doesn't tally. We don't want to reach that point. So what we do is, and then, finding what the problem is and then breaking your head over it. We don't want that to happen. So what do we do? Before going to the final stage, we do a trial run to check whether for every debit is there an equal and corresponding credit. So we list items one below the other, debit and credit. So Manas, then cash, bank, or Mansi, so on and so forth. This is 10,000. This is cash account will have a debit balance. This is 8,000, so on and so forth. Okay. And then from this trial balance, we prepare our financial statements, which is what all is included in financial statements. After the trial balance has tallied, we proceed to prepare the financial statements. What all is included in financial statements? We have statement of profit and loss and other comprehensive income. We have statement of financial position, that is balance sheet. We have cash flow statement. We have statement of changes in equity. We also have
Notes to accounts.
significant accounting policies.
Yes.
And after that, we have notes to accounts. Earlier, we referred to IAS 1 for the format for preparation of financial statements. Now we refer to IFRS 18 and IFRS 19 for preparing the financial statements. In our FR syllabus, when we prepare financial statements, we'll be preparing statement of P&L, we'll be preparing financial position, we'll be preparing cash flow or analyzing them. Then statement of changes in equity, maybe. This we don't have to prepare in the exam. So significant accounting policies and notes to accounts. We are not supposed to prepare these. Exam they don't ask us, but yes, of course, in real life, you have to prepare these documents. Our journey, when we do the FR syllabus, when you watch the videos and we do the questions, what we'll be doing is there are multiple items that go in the balance sheet and P&L. There are items like fixed assets, current assets, and inventory, and creditors and debtors, and this and that, and everything. Now, each of these accounts, we will be looking at them in a separate accounting standard. What is the job of the accounting standard? The accounting standard basically lays down rules and regulations for you to follow. Okay, these rules and regulations have to be adhered to when you are recording the accounting entries. Like there is a separate accounting standard for inventory. Then there is an accounting standard for fixed assets, which we call property, plant, and equipment. Then there is investment property. So for every item that you list in the financial statements, there are certain codified rules and regulations, all of them written in one place. That place is your accounting standards. And our journey in the next couple of days is going to be centered on understanding different accounting standards and understanding the syntax of solving these questions. There are rules and regulations that need to be followed. You will be required to remember the rules and regulations for every accounting standard. Okay, and then of course we'll apply that in our preparation. So that is exactly how the FR journey is going to be. The reason why I gave you that specific recording also around 6 to 7 hours on basics of financial accounting, and why I revised it today with you, the reason is simple. This is the foundation. If you get this right, if you get the accounting entries right, other things become easier for you. When I use an accounting entry in class, for example, non-current asset account debit to bank account, at that point, I expect you to know and remember that why did I debit a non-current asset? Why did I debit cash? Why did I credit cash account? I expect you to know all of these points when we actually start our journey. Okay. Now, as per the timetable that I have given you, there is one session today, and then there is another session on 25th of September. The session on 25th of September will focus on questions in IAS 2. Okay, IAS 2 inventory is an important standard in FR. Maybe at the higher levels in your journey, it's not so important, but FRK preparation mein, the accounting standard is super critical. So you study the accounting standard. I love you. Keep on following the list of videos and in the order that I have told you to. But in the next class, I will pick up questions from IAS 2 primarily. There aren't too many questions. मतलब छोटा standard है, तो बहुत सारे questions are not available. We'll pick up those questions first, and then we'll move on to there's only one question about IFRS 13 in your syllabus. We'll do that. Okay. So in the next class, come prepared with this so that question practice can happen. After that, I'll be giving you a test on. Acha, the test will be a combined test on which standards. Please put yourself on mute if you're not talking to me. The next test will be on IAS 2 and IAS 37. Two standards, 15 questions. Okay. And I will release the test on upcoming Saturday. You will get 2 days to complete that. Okay. Thank you so much.